My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people are my friends. I'm just trying to make some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Not enough jobs. Too many people unemployed. Virus spiking. Vaccines not coming soon enough because even warp speed is too slow. That's a lot of bad news. But as Wall Street sees it, bad news is the perfect recipe for a $1 trillion stimulus bill, which is why the Dow ultimately rallied 249 points today. S&P gained 0.88%, and the NASDAQ, which has been lagging of late, up 0.70. Yet we saw concentrated buying in many of the stocks that really would benefit from a massive injection of federal cash. For instance, Caterpillar hit an all-time high. The oils are on a roll. Remember, I keep telling you, if you want it to be in those, it's Chevron or Pioneer. The semiconductor stocks, they just roared, especially the ones with cell phone exposure. And yes, Starbucks jumped $2. That's become, other than Disney, which we'll mention in a few minutes, the ultimate opening of America play. But will we really get a stimulus deal? I think that's the perfect place to start our game plan for next week, because if the supercharged stimulus talks don't lead to some kind of agreement over the weekend, I fear that we are going to get hammered when we come in on Monday. Let's be clear. The Labor Department's non-farm payroll report this morning at 8:30 was a disappointment, although not a surprise if you were paying attention to the spike in COVID infections or the death toll. For whatever reason, the predictions for these kinds of numbers don't seem to be impacted by common sense. The fact is, we're in real trouble when it comes to the virus. It's circling, and you have to believe a good chunk of the economy is going to get shut down. It's not the government's people. It's going to be shut down by fearful individuals who don't want to get sick and are actually worried because it is a serious illness and deadly one. So we absolutely need a stimulus deal. I mean, I love a big one. But even a smaller compromise bill would work if it acts like targeted business interruption insurance for the small and medium-sized businesses that are now dropping like flies. Today, the president's chief economic advisor, my old partner Larry Kudlow, outlined on Squawk on the Street exactly what kind of plan. He said it's what Trump wants too. But the White House has never actually been the bottleneck here. You should realize that. The chief obstacle is Senate Majority Leader Mitch McConnell, and he's still not on board. I hope today's not-so-hot data convinces him to change his mind, but it's possible the data doesn't matter because he doesn't seem very data-driven. All that said, this market has an uncanny ability to divorce itself from the horrors of the present moment. Instead, Wall Street's focused on the bountiful profits that we're likely to see from tech, from housing, and from auto companies when various variations of them report next week. If the numbers are good, this market could have more upside, even with some more bad news about the virus. Housing's been the brightest spot in the economy as people flee the cities for the suburbs or the country, because if you're stuck working from home, you might as well live in a big house rather than a tiny apartment. And of course, you want to leave the city because it just seems all kinds of dangerous, particularly with public transit. Toll Brothers will tell the tale when it reports on Monday after the close. They have metro properties, but they're also known for exactly the kind of suburban homes that affluent people are flocking to right now. Remember, a home is your school, a home is your office, a home is your home entertainment center. We also need to take the temperature of the cloud, as we did, as you'll hear later in the show, this time with the help of Coupa software, which helps businesses find savings in procurement. They build themselves as the Salesforce of expense management. I like Coupa a lot. So let's listen. Hey, speaking of Salesforce, they have their investor day on Tuesday, and it couldn't come at a better time, given that they just announced one of the most controversial software deals in history, the Slack acquisition. I think it actually made a ton of sense. I think I'm alone, other than Mark Benioff, the CEO. Just kidding. Slack's products are terrific, and Salesforce needs them if they are going to hope to go toe-to-toe successfully with Microsoft in the battle for the enterprise. I hope after the meeting, people will realize that Slack isn't just some also-ran loser that Salesforce stumbled over. The company just reported an amazingly strong quarter, even better than results from Salesforce. Not that anyone was paying attention. Some people will tell you that all big tech deals fail, but Salesforce has done this before. They bought Tableau software and MuleSoft. Both those takeovers worked out exceedingly well. Plus, CEO Mark Benioff tried to acquire Twitter, but he was willing to be disciplined and walk away when they asked for too much money. So he obviously must think that this deal is okay. Benioff knows what he's doing. Historically, betting against Mark Benioff has not been a great strategy. On Wednesday, we'll find out how Lowe's is doing at its investor day. Marvin Ellison, the terrific CEO, has been trying to turn this battleship around as fast as possible between COVID costs, lack of tech infrastructure spending by his predecessors. The turnaround has been difficult, but going in the right direction. I believe in Ellison's vision. And once he finishes executing it, Lowe's will once again rival Home Depot in profitability and growth. I think this could be a very positive meeting. A lot of good things to say. Same goes for Starbucks, which has its biennial confab on Wednesday. Starbucks is running, the stock was running all day in anticipation of this meeting, but I don't think it's a reason to take profits. They've got a huge Chinese business, and that Chinese business is already back to normal. When we get the vaccine here, the lagging U.S. business will catch fire too. It's just a question of when, not if. We got a couple of major earnings reports on Wednesday, too, we got to focus on. We're going to hear from Campbell's Soup in the morning. The last time they had a great quarter, but they gave guidance that was, I think, misinterpreted as to being tepid. Oh, I bet you they won't let that happen again. So therefore, I think you should buy some Campbell's going into the quarter. Oh, you want one to buy go into the quarter? After the close, we get results from Adobe. You know that's a big Cramer favorite. And this company's tied up in digitization, and I'm expecting terrific sets of numbers. It's another buy. There's always some niggling division that people don't like, and then you look a few weeks later and the stock's up big. How about Disney's analyst meeting on Thursday? Now, here's a stock that's become the ultimate reopening play. Oh, wow. I mean, this company has been sitting still. While people think it's been sitting still while they're waiting for the vaccine. Au contraire. I mean, we're going to hear about rising profitability of Disney Plus. That's my suspicion. That's their insanely popular streaming service. Remember the last time Disney held a big analyst meeting? The stock gapped up huge. This time it might not happen because COVID's out of control, but my charitable trust still owns this one. And we're betting that we're going to like what we hear. We have held on it through thick and thin, Mr. Bob Iger, former CEO. I'm not going to get rid of it now. Then there are two quarters that I expect to be bullish on Thursday night. That one is being counted out and the other is being counted in. Costco and Broadcom. People didn't like the last month's numbers from Costco. I said, well, you give me a break. They just gave you a special dividend. It's the most consistent retailer in the world. Shut up and own it. You actually should hope it comes down so you can buy some more. That's from Jimmy Chill. As for Broadcom, the semiconductor stocks had a gigantic rally today. You know why? I think a lot of it came down to the fact that not one but two research firms gave you a cold shot, predicting that Broadcom, symbol AVGO, will have a remarkable quarter. Now, we own both Costco and Broadcom for the Charitable Trust, which you can follow by joining the ActionAlertsPlus.com club. I feel good about them, as you will know from your club bulletins if you're a subscriber. Now, if Broadcom delivers, there'll be excellent pin action throughout the group like there was today when you started looking at what a Texas Instruments or Qualcomm is doing or Skyworks Solutions. You bet they're good. Any of these things are going to be good. And let me tell you where else it's going to drift back to. A stock that didn't act so well, Apple. Finally, Friday should be quiet, except for consumer confidence numbers. Typically, I don't really care about these, but let me tell you why I'm looking. I'm afraid I'm concerned. I should say I'm concerned that the consumer's starting to worry that the vaccine won't arrive in time to save us from 30 to 50% of the country getting the virus. Yikes. But those are the kinds of projections we are now hearing from the professionals. I think the consumers held up incredibly well given that, but who knows how long they can continue when all the COVID numbers are headed in the absolute wrong direction. Here's the bottom line. If the Democrats and Republicans in Congress can make a stimulus deal over the weekend, this market can indeed keep running. Without some progress in Washington, though, next week could be a lot more difficult because we're entering the most horrific phase of the pandemic, and someday it has to impact stocks. And not in a positive way. Joseph in New York. Joseph.
Booyah, Jim. Happy Friday.
Thank you. Same to you, Joseph.
So I wanted to get your thoughts on an e-commerce retailer that's had an impressive run all throughout the pandemic. It was trading at a level 40% above its pre-pandemic high until it dipped yesterday after releasing its Q3 earnings, in spite of strong global sales growth. Since the holiday season is upon us and disposable incomes are tight, with a lack of stimulus, what can you say about the company Land's End?
You know, this is a really interesting stock. We had them on, and I recommended it pretty hard. I said, you know what, this is a great kind of niche story. I want people in it. And then the stock just got crushed, and I felt like a complete joker because I said, wait a second, high quality, really the answer to a lot of companies' prayers in retail, and it's finally getting the recognition. You know something, Joseph, you're right. Now, but hold on to LE because the move may just be beginning. Okay, if a stimulus deal can get done this weekend, this market can keep roaring. If not, could be a little hangover. Well, man, buddy, tonight, share some CrowdStrike surge after earnings, but is it time to strike while the iron's hot? I got the CEO. Then the CEO of electric vehicle company Canoo calls his first model a spaceship or loft on wheels. Intrigued? I'll tell you if it's worth considering ahead of its public offering via SPAC. And it's a $13 stock. And is Zscaler on cloud nine after its report? I'm sitting down with the CEO and crunching the numbers. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.